All right, so what you're looking at right now is ARC, and this coin is honestly kind of mess, but it's exactly why it's interesting. If you zoom out, just a bit, you'll notice something immediately. When ARC decides to move, it doesn't walk, it literally teleports, like here from the lows, it's like, 100%, and, it's just green candles without pullback. And it's not random. Now, before I even show you the trades, there is one thing about this coin you have to understand, because this is where the edge is coming from. When we go to CoinGlass, you'll notice something pretty wild. And yeah, here it is. The open interest is bigger than spot market cap. That means the price actions you're seeing here, it's not spot driven, it's being dictated almost entirely by perpetual futures. And when derivatives control price, you get this kind of behavior. Grinding moves up and everyone's getting comfortable, just directional longs entering. And when they decide to take their profit, literally nukes. It's just sharp move down. So that's why in this case I wasn't interested in longing, because I wasn't so confident on that side. I was actively hunting, shorts, and I will show you two of them that I took. Now this is where it gets interesting. So on Velo, sorry, I will clean this up. So step by step. So here we are on Velo platform. I will, tune in a 15-minute chart to show you. So the first thing I've spotted, was this huge open interest buildup. Yeah, so this is it. And, it was followed by CVD. So it was literally directional longs aggressively entering. And the open interest was getting pretty stupid. I was like, what the hell is this? Like historically, like the previous year, it did the same thing and it came back. So my strategy was simple. I have taken the previous high on H4, and that was the target I was looking for. So this was the level. So we were like around here. So now let's go to 15 minutes. And when we approach the resistance, the open interest was just spiking and the price wasn't moving. So I entered. I can't exactly remember, but I think it was like around here. My stop was above the previous high, I think. Yeah, it was like 88. And actually, the trade could have gone like better. I was going for a 20% move, and it nuked like another 20% after I realized the profit. So yeah, that was fun. But you can see that the open interest just the directional longs, you can just imagine this directional longs exited and we get this sharp move. You have like here a huge build up, as you can see, without any pullbacks. So after we just hit the resistance and the open interest is just grinding higher, it's the derivative market is bigger than actual spot market. Someone has to like take profit. So this was like pretty confident trade. So the profit was done. You can see that there was pretty some huge liquidations on this. Pretty nice. And another trade I have taken was this one. So my stop was pretty tight. It was about previous high. And I was chasing 20% move that was like hit exactly. So that was pretty nice. You can see there is not much of eye flash, but the setup was same. And it was pretty scary to take because this was completely different um, than the previous trade, and I will exactly show you why. If we compare this shitcoin to BTC, just quickly, we go to 5 minutes, 5 minute here. So if we're going to talk about this, there is a, it's Yeah, it's here. So basically, what I'm trying to say, you can see this huge. I think it's where is it? It's on a fifth. Yeah, it's 11. It was where it was actually here, I think. Yeah. This is where the Bitcoin started to jump. So you get this move, and you can see this move higher. So this is pretty interesting because they are cross margin traders, and they are shorting this because at the end of the day, all of the altcoins going zero. Like, it's a meme, but like you can have like net short positioning on some alts if you have like enough margin. At the end of the day, you are right usually, and you can see that when Bitcoin was going down, we got these huge spikes even here. you know on this correction, it joined for a bit, but there was also like huge spikes on every little bit pullback on a Bitcoin, and then the chart became more or less same. Yeah, you can see that same. This was something that cut me off because this is literally cross margin traders closing their positions. So I was actually shorting here, but cut it out after immediately I saw this weird candle, and those spikes were the traders closing their positions to cover for BTC. And here, when I saw it's no longer happening, and it was like weak, same as the BTC, I joined short. But after that, the same scenario is happening here again. I'm not actually here in a trade, but I would have taken it if I didn't have a time. That's just the reason. But you have the same pattern, huge open interest buildup. Actually, this time we spiked above the previous high, and I think we attacked this from the 2025. Yes, we tapped there, and the momentum just you can see it's still grinding up, but the price is going down, and right now the directional shorts are closing, and it's just a swift price action down. So just to sum it up, you know just find just finding the edge is pretty simple. You just need to find something interesting. This is mainly built around the open interest, the crowded trades, and just to know where to exit. Just when it hits like SR level, by the definition, this is where the momentum cools down, and after that you can just look for the swift short because it's mainly derivative market price driven. So yeah, so that's the edge I found, and milk it 2 times. And also, I mean, this during the BTC downfall, it was pretty, the second one I wasn't pretty sure because those spikes when BTC is going heavily down and this is spiking up, it's pretty scary, because cross margin traders covering their positions for BTC, or covering their positions or ARC to answer the call margin on BTC. This can fuck up your strategy, but yeah. So that's everything for me. Thanks for watching and have a good one.